If you're just starting a business, it's important to build your business credit. Business credit allows you to more easily apply for loans, receive better loan terms, get more favorable terms from suppliers, and get you access to cash for growth and expansion. About 29% of failed businesses failed because they ran out of money, and according to the Federal Reserve Bank's 2020 Small Business Credit Survey, 36% of companies who have trouble accessing loans and credit lines were denied due to a low credit score. So building your business credit gives you access to more capital to ensure you don't have cash flow issues and prevents you from having trouble accessing loans and credit lines should you ever need them. Building business credit involves a number of factors, including establishing your business's fundability, getting listed with the most important business credit agencies, and establishing credit lines while keeping them in good standing to build your score. In this video, we'll look at establishing business fundability, registering for business credit reports, and establishing starter vendor credit trade lines. Before we dive right in, let me just say this real quick. We have a lot of links in this video. So instead of stopping each time to point out that we have a link for something, we'll just have this little thing pop up and play this sound to let you know we have links for more on a particular topic. The first step to building business credit is setting up your business properly. This will serve as the foundation for establishing business credit. Lenders use various criteria when deciding to extend credit, like whether a business has a business phone line with a 411 directory assistance. A dedicated business phone line tells lenders that you're a legitimate business, posing less risk to them. Learn more about the best business phone service to pick one that works for your business. You'll also want to have a business website. A business website not only represents your brand, but also provides all interested parties with information about your business. This includes information like your domain branded email address, business telephone number, physical address, how long you've been in business, etc. Lenders use this information to audit the information on your credit application to determine your credit worthiness. You and your business must have credibility in order to build business credit. This requires registering your business as a formal business entity, such as a limited liability company or a corporation. Keep in mind, you cannot effectively build business credit as a sole proprietorship because your personal income is attached to your business income. After you choose a business structure, you need to set up an employer identification number, also known as an EIN. An EIN is a unique number issued to businesses in the United States, and employers need one to file their taxes. Your company must be located in the United States and meet certain requirements to be eligible for an EIN. An EIN is necessary for filing a business tax return when a business has employees, as well as opening a business bank account or applying for loans from a bank or other financial institution. You can get your EIN for free on the IRS website, via fax, or by mail. If you'd like to learn more about EINs and how they can benefit your LLC, check out our What is an EIN video. The next step to setting up your business to help build business credit is setting up a business checking account. Having a business checking account will keep your business finances separate from your personal finances. A business bank account will make your company more financially secure and give you access to loans when needed. You can open a business bank account by going to one of the many online banks that offer this service, such as Relay or Novo. Another step you'll need to take in setting up your business credit is getting a DUNS number. A DUNS number is a unique 9-digit identifier obtained through Dun & Bradstreet. This number identifies your business as separate from every other business around the world. This is the number creditors use to look up your business credit file to find your credit history. To get your credit score reported by Dun & Bradstreet, you need to set up an identifying number through their website. After making sure your business is set up properly, you'll want to start building business credit history. Credit history is an important factor when trying to get a loan or borrow money for your business. Many businesses start out not having good credit because they haven't had enough time to build it. Thankfully, there are many companies that help build business credit. Doing the following will help you establish business credit and start your business off strong with good credit history. Paying all vendors, lenders, and creditors on time, or better yet, early, is one of the most important ways to build and maintain your business's credit score. Here are some tips. Prioritize bills by importance, such as taxes, payroll, aged payables, utilities and rent, key vendors and suppliers, secured debts, insurance premiums, large, then small debts, credit cards, other business debts like advertising, etc. Set up reminders on a calendar app like Google Calendar, Microsoft Outlook Calendar, etc. to remind you when bills need to be paid. Make sure to pay at least the minimum payment for all your bills. Or, even better, pay all balances in full or early each month. Use a working capital loan to pay your bills each month, then pay this balance with your business bank account as a recommended, but not necessary, tip that will help you better manage your cash flow while also building your business credit profile. In addition to paying things on time, you'll also want to set up Net 30 vendor accounts. Net 30 accounts are set up with vendors that offer businesses a buy now, pay 30 days later option on business services or products. If you make your payments on time with these Net 30 vendors, they'll report it to business credit bureaus. When your business places an order with a company offering a Net 30 account, they ship the order to you and send along an invoice that must be paid within 30 days from the date listed on the invoice. The top of the invoice will list the Net 30 terms. For example, an invoice that states 5/7 Net 30 indicates you have 30 days to pay the invoice. If paid within 7 days, though, you'll receive a 5% discount on your order. Many businesses set up Net 30 accounts with vendors when they want to test a product or service before they buy, they have consistent supplies they need, or they need to make sure their other accounts and assets are all set before they pay the Net 30 vendor. Setting up these accounts shows that you and your business are reliable and good with money management. It's recommended to set up at least 5 Net 30 accounts to maximize your credit building potential. In addition to setting up Net 30 accounts, you can also increase your number of credit lines. Build more business credit by applying for business loans and business credit cards. Approval for these types of credit vehicles is now possible since you have Net 30 vendor trade lines on your business credit reports. Business loans are one of the most popular ways for entrepreneurs to start and grow their businesses. By applying for a business loan, entrepreneurs can get the money they need to start producing and selling their products. Before applying, make sure that you have the following: an established track record in your industry, evidence of how your company is profitable and how much revenue it generates every month, and a solid plan to repay the loan on time with interest as well as collateral where needed. Most small business lenders want to see 4 to 6 months of revenue history and active credit lines that are being maintained. Once you have all that, you'll want to actually apply for the loan. In order to apply for a business loan, you'll need to contact a bank or use a service that compares rates from multiple lenders to inquire about a working capital loan, find out all the terms and conditions and what the interest rate will be, check around with other lenders to find the best terms, make sure your credit is solid, meaning you've paid your accounts in full each month, and your credit score is high enough to qualify for a working capital loan, and finally, apply for the loan. In addition to applying for a loan, you can also apply for a business credit card. Getting a business credit card is an essential step for building business credit. With a business credit card, you can build your credit history and grow your company without reapplying for new loans when extra cash flow is needed. The qualifications for applying for a business credit card vary by company and bank. For example, some banks require applicants to be in business for more than 2 years, while others do not. You can get a business credit card with just an EIN. You don't have to give your social security number, but do make sure you follow the above steps outlined in this guide so you have good business credit profile and a high business credit score. Follow these steps to get a business credit card. Research various business credit card options online because there are many types of cards offering different terms and benefits. Choose business credit card offers that will benefit your business most, like frequent flyer miles, low APR, cashback rewards, concierge services, high lines of credit, etc. Apply for the offer by filling out the business credit card application form online. Be sure to use your EIN and not your social security number. Wait for a response to come in the mail. This usually takes a week or 2. Then, start using your new business credit card and be sure to pay the card balance in full each month. Keep in mind, some companies have higher asset requirements than others. It's a good idea to check with the credit card company first to determine if your business qualifies. Now that we've covered building business credit, let's look at what to avoid when building business credit. It's in every business owner's best interest to know what will hurt your business's credit score and affect your company's risk assessment. Avoiding the following practices will help your business maintain its credit score and reduce potential risks. This may seem obvious, but predatory lenders are becoming more and more sneaky and are good at preying on businesses seeking to build business credit. They offer expensive loans that may seem good at the time, but are near impossible to repay. In addition, they tend to offer you a high daily interest rate that can put you out of business quickly. Only take on business loans you can afford to repay, and if a lender offers you a daily interest rate, run as fast as you can. Your business credit report is a reflection of your business's ability to repay its own debts. Paying your business's debts using your personal accounts indicates to creditors your business has taken on too much debt and therefore should not be extended more credit. Pay back creditors using a business checking account or a business credit card. Never repay debts with a personal checking account or a personal credit card. Never assume a net 30 trade vendor will report your repayment history to the major business credit bureaus. There are many that don't. Those that do not report trade lines on your business credit reports will not help you build business credit. Ask potential trade vendors which business credit bureaus they report to and how frequently. Only do business with net 30 trade vendors that report to the major business credit bureaus. Not updating your business information is a surefire way to hurt your business credit score and negatively impact your likelihood of obtaining a business loan. Make sure your business credit reports are up to date and accurate, and check that your business documents are properly filed at local, state, and federal levels. If anything has been falsely reported, make sure to get it updated immediately. While avoiding all of these, you'll also want to monitor the business credit you're building. We'll talk about that next. Monitoring your business credit yourself requires regularly pulling your business credit reports and checking your business FICO score. It's recommended that you become acquainted with the different credit reporting agencies and learn how to use them to pull your business credit report. Know the credit reporting agencies that matter most. There is 𝐅𝐫𝐞𝐞 Corporation, also known as FICO, Small Business Scoring Service, or SBSS score, the Dun & Bradstreet Paydex score, the Experian IntelliScore Plus Credit Score, the Equifax Payment Index Score, the Business Credit Risk Score, and Business Failure Score. Dun & Bradstreet is the main credit reporting agency for businesses. Getting an account set up isn't complicated, and it doesn't cost anything, but will ensure you start getting trade lines as you establish and build credit with vendors and other creditors. Learn how to pull your credit reports and check your business FICO score with our guides, all of which are linked below. If you don't have time to monitor your business credit, consider outsourcing this task out to a business credit monitoring service. They'll monitor your business credit reports and provide valuable consultations and insights to help you build business credit. Lastly, fix any business credit errors and discrepancies. Check each credit report thoroughly. Note any wrong information. Dispute errors and inconsistencies with each credit reporting agency. Make sure to update your business information, such as your business phone number, website, address, etc., and check your reports regularly to ensure accuracy. It's important to keep in mind that privacy laws protect personal credit. However, business credit is not protected, and anyone can gain access to your business information. Starting a business without building business credit or having a low credit score can prevent you from having access to additional capital through loans and other credit lines. About 29% of failed businesses did so due to lack of capital. By building business credit, you can ensure that you can get any loans and credit lines that you may need, as well as having access to these loans and credit lines with lower interest rates and better terms. It can be a slow process to build business credit, but with a strong established business credit rating, you can get access to benefits like low APR, increased lines of credit, and good relationships with vendors. If you have no business credit, you'll want to establish business fundability, start with net 30 vendors, and work your way up to capital loans and business credit cards. You'll also want to regularly check your credit reports and FICO score to ensure all information is accurate and up to date. For more information on building business credit and detailed guides, check out our pages at howtostartanllc.com, linked below. Give the video a like if you found it useful, and subscribe if you'd like to see more. And if you have any questions or encounter any roadblocks, leave a comment below. Good luck in starting your small business.